Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the activity on the major markets, with some of them posting their best one-week upturn in decades, and comments on whether this uptick can continue with crude getting crushed. Publisher of the Leibovit VR newsletters, Mark Leibovit, takes a look at how recovery might look like from the coronavirus panic and whether the virus was unleashed to cause this kind of mayhem. InsideTrackTrading.com president Eric Hadik examines how closely the market's indices cycles follow solar activity cycles. He believes the correlation is too big to ignore. Take a listen. You might agree. Plus, at the end of the show, we'll have a company showcase update from American Manganese president Larry Reaugh. We'll talk to Ross Clark right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can also find him on Twitter at ChartsByRoss. Welcome back to the show, Ross.
Always a pleasure, Jim.
Ross, the rebound on the equity market's pretty remarkable this week. The Dow saw its biggest weekly gain since 1938. The S&P, its biggest uptick since 1974. Does that mean good times are back again, and let's jump in the market?
Well, that's the big question. Was March the 23rd the bottom, or was that just a panic low that ends up getting retested? And time will tell on that. From a technical perspective, looking sort of overriding the news factor and assuming that markets are ahead of the news, especially when you can see that the number of cases and deaths at this point, we're going to plateau here within the next couple of weeks. That the market is now thinking beyond that into what kind of recovery there might be. But from a technical perspective, when you have a big sell-off, a hard capitulation low that we have by definition on the 23rd on our work, you are typically going to have an ABC rally. You're going to have two waves of buying. So the first wave recovered 38% of the decline. That was pretty quick. That happened in about 3 or 4 days. We had a pause back down, and as of the end of the week, now you have the S&P, the Dow, and the NASDAQ. They've all recovered half of that monstrous decline, and they've come back in a very fast fashion in this last week. But the fact is that they're at 50% retracement level. They're at their 50-day moving averages, and that's a classic. Once you've had a hard sell-off like this, this is where the market should start to have some real difficulty as we move forward. And from what I've come up with, we've got a better than a 50% chance of going back down to retest the low. At a minimum, we should give back about 60% of the gain that we've had. And that's from whatever high comes into play that we're on this move that we have right now. We need to see a shift in momentum, just away from this really strong pace of the last 3 days going into the week, which, interestingly enough, is around a long weekend, which historically is where you tend to see market strength around long weekends. So if in the next week we lose some of this momentum, it starts to roll, then I think you can be looking at a pretty solid correction to the downside. Euphoria is back into the market, but that does make it vulnerable at this point. The jobs numbers that have come out are horrendous. Everybody knew they were going to be. let's see what the market ends up doing.
Now, the oil patch in Alberta, who was already in a situation where they'd been devastated, the news couldn't be any worse as the markets closed on Thursday.
Oh yeah, I mean here we had West Texas intermediate was up to $28 on the good news out of Russia and Saudi. But then when you started to look at the details of it, it was the cutbacks are going to be nowhere near what are needed to take care of this big drop in demand. And so you got crude oil in the U.S. we dropped from 28 intraday down to 22.5, closing around 23.60. But in Canada, the price basically dropped in half today. Western Canadian Select closed off the week at $3.59. And for the day, that was down $3.52. I mean, there's just nobody in Canada that's going to make any money. But, they can't cap these wells. They can't shut them in. It costs too much to do that, and then to eventually bring them back on is going to be just so horrendously expensive. So they're forced to keep them up and running and forced to continue to lose money. Just what a scenario. You just couldn't have developed anything in any model that would look anything like this. And so, the impact on the Canadian dollar, I think that this rally we've had up to 71.5 is probably just about ready to see its top right now and start back down again.
Does that mean Canadians should be buying U.S. dollars to protect themselves? You got to be a seller on rallies when items are in downtrends, and right now that's what you want to be doing. You got to maybe buy some U.S. dollars, even though they seem expensive right now. Looking down the road, this may look like a pretty good number. Mm-hmm. The real winner of the week is the gold market. A week ago, the commitment of traders numbers came out, and we didn't get any this week because of the long weekend. We won't see any new ones until Monday. But a week ago, the commitment of traders numbers had dropped enough that the speculative position, which had been about 350,000, dropped by 100,000. So dropped, by 25% in round numbers. And that that was on that break that we had into the $1,450, $1,500 level, just enough to finally shake everybody out. And the speculators have had such a big net long position for a number of months here that, we knew at some point there would be that big clean out. It's now behind us, which is one of the most bullish things that can happen because you've got all those previously committed people to the market back on the sidelines, and as gold starts to gain momentum, and we're assuming that it will at this point, they are new buyers set to come back in again as soon as they become convinced that the trend is back in their favor. So the gold, spot price still just sitting a little under 1,700. Our target is up at 1,888, and wouldn't be surprised that we end up seeing that before this whole unwinding of the current economic condition runs its course. Ross, stay healthy out there and have a good long weekend.
The same to you and your family and everyone out there.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Mark Leibovit next on This Week in Money.
Always consult your investment professional before making any investment decision.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. He was the #1 U.S. stock market timer in the January 2020 edition of Timer Digest. He's speaking to us from Arizona. Welcome back to This Week in Money, Mark.
Thanks, Jim. Appreciate you having me back.
And like just about everybody else in North America, you're working from home. We might hear 3 dogs or so in the background, I guess.
And maybe even a couple neighbors' dogs, too.
Mark, before we get into the interview, you have a special offer for our listeners.
Yes, for subscribers, we're offering a promo code for this broadcast. It's 2020 half off. That's 2020 HALF OFF, just as it sounds, is one phrase. You go to VRTrader.com. That's V as in Victor, R as in Robert, Trader, VRTrader.com, and any of the products up on the screen. Once you place your order, there's a little box that opens up where you'll see it says promo code, and you just enter 2020 half off, and you get 50% off on any of the products. And this is only offered on this program.
Mark, could the U.S. stock market be a leading indicator that the economy could be up and running as soon as next week?
Gee, that's a tough question. I don't know about next week. There's a talk that Donald Trump may want to open things up a lot sooner, but there's still a lot of people unemployed. The businesses have to gear up. I don't think it's going to open up that fast in terms of getting back to full activity. It's going to take weeks or months for that. So the market is anticipating the future, as it always does, and we've been positive here since March 23rd. Based on our cyclical work, but our cyclical work doesn't say the market is going straight up this year, and it's going to be a turn here pretty soon. It'll come even today. We'll know on Monday or Tuesday after the holiday, but generally is an expression that works more than it doesn't, but maybe more applicable this year is sell May, go away, and sometimes the tops come in April, not May, and since we've had a big run here, you got to be a little careful. So, backing up to your question, I don't think I want to tie the economy to the stock market so fast. Though the market's a leading indicator, I don't think the economy's turning as fast as people would hope.
Where are the stock markets in their bottoming process?
Good question as well, because enough time hasn't passed. If we don't have enough statistical evidence of market crashes to compare all the instances, but if you just look back at 2008, 2009, you had an initial low, rallied sharply. I think the initial low was the end of 2008, and then into 2009 we came down and made a lower low and ultimately turned higher. That's a possible pattern here. The market could indeed reverse lower again after this nice rally. It's been a nice rally. And though I'm positive, and I think we're ultimately going to new all-time highs, over the intermediate to longer term, 1 or 2 years out for sure. I can't say that we're going straight up for here, so I would pretty much be more on the cautious side right here because we've had a big move, and that maybe sell may go away, phenomenal show up, and we'll have another buying opportunity later in the year. I think we've talked about this before. I mean, you got the election coming up. And, reality may hit on the economic numbers as they start coming out here in the next quarter or in two. So, we have to sort of wait and see. But, I'm overall a bull, bigger picture. But I think this year you still have a lot of potential choppiness out there, and we're traders, so we'll do our best. For example, we're trading crude oil the last couple days here, and we caught a nice little bounce in a couple shares in the ETF for crude oil. In fact, we bought and sold a couple times, and that's sort of the methodology that we're trying to follow here, is try to catch, some of the short-term moves here. And I would tell your listeners that, we do make some intermediate forecasts, but we're really much shorter term in our approach to the markets. I come from a day trading background as a former market maker on the Chicago Board Options Exchange almost a lifetime ago. And I was sort of trained to take your profits every day, go home flat with no positions every night, come in with a clean head the next morning. sort of view the whole business as a way of making a living, like you get paid per hour for your job as a comparison, and you take home your paycheck every day, come in fresh and try to do it again the next day. So most of my mentors literally closed out all positions at the end of every day, came in, traded during the day, and they made some pretty darn good livings. And not that we do that every day here, though we did do it today with a couple of the oil-related plays. We had a couple of trades in and out. We ended up flat with no position at the end of the day. I just would say that people looking at VR Trader, particularly our market timing service, our trading A service, platinum service, we tend to be a bit more aggressive, though we do have core portfolios in the metals resource letter and our cannabis Canada report letter. We sort of keep core positions there, but most of the activity is shorter term. So to answer your question, I'm taking more of a trading approach.
The coronavirus numbers are coming in more in line, some say, with regular seasonal flu. Could this awareness lead to a full market recovery?
I don't expect a full market recovery, at least based on what history tells us. Backing up to my current statement, I think ultimately yes, but not right away. I'd be very surprised if we go back to new highs, though obviously if we start to see breakouts, we'll jump in and try to participate. Well, it all depends what the government plans to do. Obviously, Ronald Reagan created that plunge protection team back in 1988. Executive order, I think it's 12684, if I'm not mistaken, called the Working Group of Financial Markets. It's funny because we listen, that is, to the financial press or television. They talk about the ability of the government to get involved in the equity market directly, and they might have to get some further approvals for that. But according to the plunge protection team executive order, they already have the ability to do it and have been doing it for decades, so they're not admitting it publicly. As we know, Japan exercised their authority to get into the stock market directly, buying stocks and ETFs. So I guess if the market it responds to direct government intervention, and they feel like they got to get the stock market back to new highs, they have enough money in that printing press, I guess they can get in there and drive up the market to new highs. That would surprise me, but it is theoretically possible. They have the money to do it.
Are there sectors that are ripe for recovery and others that are not?
Well, crude oil is one of them. Way down there was a manipulated break, based on a deal or supposed deal between Russia and Saudi Arabia, and it was just, it was a manipulation to drive prices lower, so that way undervalued there. I'm speculating that crude oil could possibly even rally back to $50 or $60 this year and regain almost all, if not all, its losses, whether it's an external event or just a technical rebound, since the whole event was contrived to begin with. Of course, we could argue that with the coronavirus situation too. There's a lot of evidence that this whole event was no accident, and everybody seems to qualify it. Gee, I'm not a conspiracy person, so I don't really want to get into that. But it's not a question of conspiracy or not. I mean, I think it's pretty much clear. It's obvious to any thinking individual that something like this doesn't happen, particularly when you read about the Bill Gates Foundation and other things that have been going on in terms of planning for this type of event, and the call for a new world order, call for a new currencies, just a restructuring of the whole world order, both financially and socially and politically. And there have been discussions in reports, foundation reports, essays, and others about, hey, gee, if we create a pandemic, this is one way we could possibly get things done. So I can't give you, obviously I don't know all the details. I don't know them. We'll never know them. But it was a manipulation too. So in that sense, I guess if the goals are achieved that they were seeking to achieve, then I guess markets could go right back up again. But the things I'm reading are very disturbing about what this was all about and the goals. and the freedoms that have been taken from us or could potentially be taken from us. I read that one of the goals is to get everybody vaccinated, and if you don't, you would lose your driver's license potentially or lose your freedoms, and force everybody into some kind of vaccination program, which would make a lot of money for the drug companies. So some of the big evil players here may be the pharmaceutical companies that Wall Street seems to enjoy talking about and recommending so often. The public, from what I read and understand, over the years has become very skeptical of pharmaceuticals because of the side effects. Even if you watch TV commercials about various drugs that are being offered, and they tell you how great they are in the first 10 seconds, and the next 50 seconds they give you all the reasons why it could kill you. Well, people have come to realize that, and alternate medicine has become so popular, people deciding they can do things to take care of their own bodies, taking more vitamins, nutrients, exercise, and so forth, that I think that pharmaceutical companies have been losing business. And why not create a pandemic, force people to take vaccines to make trillions of dollars off people, and force people back into the pharmaceutical world? As evil and conniving as this concept sounds to those who may believe everything is normal and honest, it's not the case, and I believe something like this is very likely possible, that all this was a created event. Pharmaceutical companies possibly involved themselves, and we can talk about other variables. One of the other interesting stories too, the first thing that occurred to me, we talked about this probably in our first interview, was this event created to distract us from another more significant event, get everybody off the streets, get everybody into their homes. And, I wrote about it in my newsletter. I mean, there was an asteroid that was headed toward the Earth. I think it's going to pass, or was supposed to pass within 4 million miles of the Earth, which is a considerable distance. And if you look it up, do some research and just check on the asteroid website and see what was going on, that was something going on during this time frame. I think it was supposed to pass sometime in this March-April period. So what if? Just a what if. Create a pandemic, get everybody off the streets, don't tell them about the asteroid. They're all home with their families, and let everybody enjoy the last few days of their lives before the asteroid destroys our planet. It makes a lot of sense. I mean, I'm not saying this is what happened now. It doesn't appear that was the case. But my first reaction to the story is there's something else going on here, and maybe it's just this pharmaceutical connection that I just brought to your attention. The desire to control the populace, the desire to get everybody immunized to make a lot of money, desire to change the financial system to their benefit. When I say to their benefit, whoever is in control here, the quote-unquote powers that be that would initiate something like this, China included. So very interesting speculation. We'll probably never really know the answer, but as one freedom-loving individual, I'm not about to get myself vaccinated by anybody. If being forced to do it, it would have to be at gunpoint, I suppose, because I'm not going to do that. So I hope other people can realize that what's happened here was no accident. We feel bad for the people that are suffering and got sick, and hopefully we can punish those at some point who initiated this.
And of course, another theory is that China released this virus because it wanted to quell the riots in Hong Kong and public unrest in China, including the city of Wuhan, where people were protesting bad air quality.
Right. One way to get riots under control is spread a virus around, kill a lot of people, and stop, dissidents. So, and on a more, less violent scale, by forcing people out of, into their homes and fearful that they all need vaccinations and drugs to save their lives. A lot of money is going to be made by somebody during this process. So that could be the other part of it too. China is still a big player here in the pharmaceutical area, and they stood to benefit as well if there was some agreement. There was a lot of controversy here the last couple of days in the news about WHO and their alliance with China, and the fact they weren't totally honest about what was going on and what was said. The World Health Organization, which apparently also has some sponsorship from the Bill Gates Foundation. And, Bill Gates is a real problem. I mean, not only does he help support MSNBC, which is a liberal network, which basically is seditionist in this country and in the U.S., but he's also looking for a one world order and control people based on the literature that I've read that his foundation has produced. So he was involved in this WHO scandal and the whole thing as well. So we got some bad players out there, himself included.
How long could it take for the economies of Canada and the U.S. to recover?
I think they're resilient. They could come back. I really am not the person to ask this question about timing of how long it would take for the economies to come back, Jim. I'm more of a market person. There's talk of what they call a slingshot event, where the more you come back in the markets, faster and harder you're going to take off back to the upside. I think Martin Armstrong writes about that. We're just going to have to watch the numbers. I think, we could rebound nicely, but, a lot of it is political as well. I mean, if we get a change in politics here in the U.S. in the fall, and the Democrats come back into power in the United States, that's going to be very bad for the economy, because they're going to try to change a lot of the pro-business, edicts that were laid out by Donald Trump. And, that could throw the, country into a severe economic mess. If we're already in a recession, that really would throw us into depression if they pull all those economic stimuluses away. So we should be on our toes a little bit about trying to predict this. I think we need to really clear the election cycle and get a better handle of what's going on in terms of full recovery in the months and years ahead.
April 7th, we had the pink supermoon, the largest supermoon of the year. Does it look like it had any effect on the markets?
It absolutely did. It was one of those days where in fact, it occurred on Tuesday with what I call turnaround Tuesday. Markets often change direction on Tuesdays versus what they're doing on Mondays. It's more of a trading phenomenon, but the action on Wednesday, right at the full moon, was a follow through from the Tuesday reversal, and very much a factor. As you know, I do track the lunar cycles. I've been doing this for about 40 years. I think we went over the story briefly on a previous interview as a floor trader on the Chicago Board Options Exchange. I ran into financial astrologers on the floor who are market makers, traders. And by the way, that's one of the best kept secrets in Wall Street. Show me a technical analyst and I'll show you somebody who reads an astrological forecast. They all had reports in their desk drawers by some of the famous financial astrologers. I won't mention their names here, but there's quite a few popular ones out there. And nothing's perfect, but when I was on the floor trading, one particular financial astrologer was a friend of mine. He told me at a certain time the market would reverse direction, and exactly at that moment it reversed direction, and it was based on some lunar cycle that he was following. So, and then of course we had AMY.V. We talked about this too. He was a very famous analyst in Canada, out of Toronto. He did a magazine called Deliberations newsletter, and he was on the Louis Rukeyser television show in the early 1970s, and he talked about the lunar cycle and gold on national television. They didn't have him back on the show, but AMY.V was an inspiration to me as well. This is going back, obviously, back in 1972, and ever since then I've been tracking the lunar cycles. I don't do astrology at all. I'm not smart enough to do that. I have a lot of friends who do it, but if you follow the patterns of the moon, often you find, particularly if the market's overbought or oversold, you get a change point around the lunar event. So it's something to throw into your kettle of technical indicators and keep an eye open to all kinds of possibilities.
And Mark, right after we finish our interview, we'll be talking to Eric Hadik, and he'll be talking about the connection between solar cycles and what happens with the markets, and also how it can predict major outbreaks of disease.
Well, I congratulate you for having analysts on the show that, look at some alternate indicators, because everything doesn't come from a Wall Street report or a balance sheet. And, we're all controlled by forces in nature that we don't want to admit that we're controlled by, because we think we only have free will. But the solar cycles definitely have a major effect. There was reports on this for years I was reading. I don't follow them as closely as I used to, but solar flares and all kinds of activities affect our emotions, our health, the state of the markets as well react to that. Since the markets are basically a reflection of human emotion and activity. So there's a lot of stuff out there, and believe me, I've probably only scratched the surface in my career. and trying to find what other forces are out there. They're changing stock prices besides the so-called, fundamentals that we read about or learn about in school.
We'll have more with Mark Leibovit right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.ZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Mark Leibovit. Mark, does it look like the U.S. dollar has topped?
It looked that way a couple of weeks ago. It looked like it hit a double top. It pulled back a bit, and then it started to rally again. I'm really not sure. We were short the dollar versus an ETF, UDN, I think is the symbol, the inverse ETF, and we were just trading it for a few days. We took a little bit of profit. I'm going to have to revisit the chart there, but there's definitely a correlation there you got to watch, because the rally in the stock market, pretty much has been tied to strength in the dollar. And when the dollar got weak, the stock market pulled back. So you got to sort of pay attention to that. It's holding up here okay, but I don't think it's broken out to another high, so there might be a little divergence. I'm going to have to do a little more homework. Since the last trade, I haven't looked at the dollar correlation, but it's definitely a possibility. And if we start seeing some weakness in the dollar, then that might be a sign that sell May can go away is upon us, and we got to be a little cautious.
Do gold and silver look like they're poised to move higher?
Yes, very much so overall. Where cyclical work is pretty positive on it, particularly in the third and fourth quarter of this year. We've been seeing some, gains here recently as a result of the political situation in Washington and all the money printing and both fiscal and monetary stimulus that's underway. And there's been a delivery problem, as you know, with getting physical gold. Some of the producers have shut down for the coins and the bars, and there's long waits and big premiums, though I think that will clear up. But I think the state of the world pretty much supports gold holdings at this time. Even some conservative analysts, more mainstream people have been talking about gold allocations now, where in the past they really haven't. There was sort of no value in it in the past. So, I'm not here to predict any big numbers. I don't know how high it could go. There's been talk of big numbers for many, many years, none of which have happened. But I think there's some big resistance in that 1,700, 1,800 range. And if we somehow get through that, which if it's going to happen, it'll probably be toward the end of the year, then maybe we could surge toward that magic 2,000 level that everybody's been talking about. Of course, I do get questions about silver too, which has been a laggard. And many of the silver bulls are just convinced it's got to go to 1,500, or even some extreme predictions as high as $1,000 an ounce on silver, I've heard. Don't know whether that's going to happen or not. We'll just watch our charts and take it a day at a time. But I suspect silver would be stronger again past mid-year than right at this time. Looking at some of the cycle stuff that I do, the volume stuff overall is positive. But as you know, they're quite volatile, particularly some of the ETFs. And some of the individual stocks, they trade all over the place, but they're definitely in uptrends, and I think that they're beating to a different drummer in this market cycle. So I don't think we have to worry that if the stock market goes down necessarily, they're going to go down again. They did come down during the crash for, liquidation reasons. We see that happen occasion. I don't know if that'll happen again this time, but we'll just have to wait and see. But I think the physical should be okay, and if I had to time it, I would say wait till the third and fourth quarter if you're looking for more aggressive play. But I think you have to keep a core portfolio, which we do at our metal resource letter, which you can see at VR Trader.
What do you see ahead for crude?
Well, crude has been one of our best trades here. We had a nice trade in crude on the bounce here the last couple of days. I had been predicting, I was at the World Outlook Conference in Vancouver the 1st of February, or was it the 2nd of February? Maybe it was the 5th or 6th of February, I think. It's a little week later this past year, and I said, watch out, crude oil looks lower. And, Indeed, it did come down. I didn't expect as much of a dramatic break. I was also bearish on the stock market too. I said that was going to come down too, but I wasn't expecting as much as it did. But I knew, we had a sell signal, and we knew we had to be careful. It's an interesting correlation, by the way. Crude oil and stocks tend to move together, not precisely, but if you look at some of the chart patterns, and I put one of those in my newsletter in recent weeks where top and crude coincided with the top in stocks and vice versa. So I'm now that we've had a big correction, to answer your question, I'm more positive on crude, and I had speculated, and this is purely a speculation, that we could even possibly recover most, if not all, the losses in crude this year, getting back up to $50, $60 a barrel, but we'll have to take it one step at a time.
Could mining stocks move higher based on assets in the ground, even if the mines themselves have been shut down due to pandemic panic?
That's definitely likely. I think people do buy the gold stocks based on the assets in the ground, and have been or had been for many years. So the answer is pretty much quick yes.
Is real estate looking like it could be a victim in the aftermath of the pandemic panic and the closing down of economies?
Well, my reading of real estate is it's busy as heck. All the realtor contacts that I'm in touch with are having more activity now than you could imagine. In fact, they're so busy they can't even handle the contracts now. Of course, each market is different. I can't tell you what's going on in New York, or I know Vancouver is always active. I know here in Arizona, people that I'm talking to, it's crazy in terms of activity. In fact, realtors are looking. I'm getting calls all day from realtors looking to hire people because it's so busy. So whether just this part of the world is more active than others, I would say real estate is positive. And people, particularly with the market volatility we've seen, I think people see real estate more as a store of value and hopefully less volatile than the stock market. One comment I would make, however, and I'm not a genius at this, but it would make sense to me, the fact that so much of the world has turned to working out of their homes now, and some of professionals who used to work in companies that used to release a lot of office space might decide that, hey, gee, maybe we can save some money and have more remote work relationships with our employees, in which case commercial real estate, particularly the big rental properties, might not do as well going forward. Now, this is speculation on my part, but I did talk to some players who rent a lot of space, and they're saying, gee, maybe we could save a lot of money here by having employees work out of their homes versus come into the office, or at least a portion of them, and cut back on some of the rental space. They wouldn't give up all of it, of course, but there might be some movement in that direction. So I'd be a little bit more concerned about commercial real estate, particularly the rental office space part of the industry versus homes themselves, which look okay.
Are we likely to return to the old normal or be subjected to a so-called new normal?
New normal, no question about it. I think this whole pandemic thing, as I ranted and raved earlier in the broadcast, is a contrived event, and many would disagree with me, saying, oh, just a pure accident, some virus got out, people got sick, and this is what we had to do. I don't think that's the case. I think a lot of it was created so that things could change, both in the financial front and in the social area, and basically the way we conduct ourselves. Government was been trying to exert more control. I mean, what's the old expression? Don't let a crisis go to waste. Politicians, you can see this in some of the legislation that is trying to get, Democrats are trying to get through Congress here. Republicans are putting up a little bit of a barrier, but, trying to exert as much control and authority as they can at a time when normally legislation like that would never have been passed. So I think it's an opportunity for the powers that be to try to exert more control of our lives now that they're able to do what they've done. Ask us to stay in our homes and clear the streets and don't go to certain establishments. Any other kind of what doesn't even have to be a virus, some other event. Maybe some threat from Iran to attack the country, or North Korea starts getting vocal again. They can say, "Oh no, we got to exert some near martial law and tell you, hey, you better stay at your house. You may not go out." I mean, they just may. Some of the mayors and governors in the U.S. have way overstepped, not necessarily their authority, but common sense in the way they reacted to this event in terms of controlling the population. So we gave up a lot of our freedoms, and I'm very much against that. I think, yes, there's a point that you have to exert some control over people. The real question is, how serious was this virus? It is obviously killed and hurt a lot of people, but if you read the statistics, many more people have died through other means, including the common flu during a flu season. So not that you shouldn't take precautions, but I think we had a big overreaction. And if I'm wrong, I still think we lost a lot of our freedoms in the process, and this sort of sets the stage for potential events like this in the future, or any event to invoke, a government response, which is way out of hand. So our lives will definitely be changed because of this, and I think we're going to see a lot of differences in the way government acts and people act going forward. I think after this virus passes, people are so conditioned to stay 6 feet away from each other, or not shake hands, or keep your distance, so to speak. I think there's going to be a lot of slow change in terms of how we conduct ourselves, thinking that, hey, this virus may still be out there. Maybe it's going to recur again next season. Maybe we should continue to distance ourselves from people. So I think it's going to take quite a while, and that's going to be an unfortunate outcome of this event.
Is it scary that the government keeps saying if you don't stay home, we're going to turn on your cell phones and track your every movement?
That's what could happen. That's what I'm afraid of. Or as being discussed with the Gates Foundation and the current vaccine program, force everybody to get vaccinated under penalty of losing some of your freedoms. This was happening anyway, though. Google and Apple and all the technology guys have been doing more and more to track what we're doing. Anyway, this was happening, but now this has been given as an excuse. And I'm thinking of throwing away my cell phone, honestly. I know my brother threw his out a couple of years ago, and he won't even use a phone, and I thought he was crazy. But, if you have your phone on, apparently I'm told they can hear what you're saying, even though you're not actually dialed into anybody. They can track you now, and by having one of those phones, you're actually giving up your freedoms. So, really unfortunate turn of events. Technology takes us in good places and unfortunately some bad places.
Do you think President Trump has a plan to deal with the debt bubble?
Yeah, I'm sure he does. And I don't know what that is, Jim, but I know he's a smart guy. He's working on it. And I wouldn't be surprised to hear some dramatic announcements in the weeks and months ahead regarding just your question. So, maybe is it a restructuring of our currency, a gold standard? Who knows? I mean, look what they're doing now. Printing money, giving people checks, trillions of dollars being spent. It's just over the top. It breaks every economic and financial rule that you can think about. And the fact that we even closed down the country. It just, it's like you can make this stuff up. In other words, maybe there was a movie about it at some point. You can't even make up a story of how extraordinary the events have unfolded here. So, in terms of him solving the debt bubble, some extraordinary event may occur as well here on the financial front. So I really have to think more about what that could be, but off the top of my head, you're giving everybody money, just printing money, giving everybody checks. How long can that go on without restructuring the financial system somehow, which I think is coming. So we know that's a problem in Europe, and I hope we don't end up in a one world order type currency, because that's the worst thing that could happen.
Mark, how can people find out more about the Leibovit VR newsletters?
Very easy, Jim. Just go to vrtrader.com, VictorRobertTrader.com. Remember, we're stock market traders and analysts, and we've been doing it for about 40 years, so we consider ourselves survivors. So we're proud of that and appreciate being on your show.
And Mark, maybe remind people again about your special offer.
Yes, 2020 half off. 2020 HALF off, OFF, one phrase. Just go to vrtrader.com, sign up for one of the newsletters, and there's a space to enter a promo code, and that's the promo code 2020 half off. Gives you 50% off on any product.
Mark, thank you so much for being on This Week in Money.
Thank you, Jim, for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters. He was speaking to us from Arizona. Coming up, Eric Hadik next on This Week in Money.
AMY.V Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, AMY.V's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at AMYresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Eric Hadik, CEO and president of InsideTrackTrading.com. Welcome back to the show, Eric.
Oh, well, thanks for having me back, Jim.
Eric, in your latest newsletter, InsideTrackTrading.com News, solar cycles, war cycles, disease cycles, what role are they playing in what we're seeing right now on the markets?
Well, you know, I think the the report you're referring to is actually something that was published 6-7 years ago in 2014, and I've gotten a lot of inquiries about that in the last couple months, and so we've been resending that to a lot of people that are asking about it. But in that analysis, what it was discussing back then was a recurring cycle of viral / disease / influenza outbreaks that really seemed to occur at a very consistent time frame. In fact, there were several cycles discussed in there. One of them was a decennial or decadal or 10-year cycle that had timed numerous influenza outbreaks, and that particular cycle was described back in some of the Inside Track newsletters. I discussed it back in 2006 and how I thought it was going to time another outbreak in 2009, 2010. And sure enough, along came swine flu, H1N1, and it just reinforced that 10-year cycle. But the other thing that I noticed along with that was that some of these outbreaks, too, were occurring right at the real nadir or low point of the solar cycle. And on a much broader scale, you've seen studies done on times like back in the 1600s when for decades, for almost a century, there was an extreme low amount of solar cycles, and that was also your time of some of the worst disease. Now, there were other factors, obviously, but even on a routine basis, the solar cycle, which runs about 11.2 years, these disease outbreaks were also coinciding with the low points of that solar cycle. And so all that to say, without going too far into the weeds with these specific cycles, the conclusion drawn in 2014 after we had seen swine flu come in 2009, 2010, reinforced the 10-year cycle. Swine flu had really come in right at the low point between solar cycle 23 and 24, so right when it's transitioning from one solar cycle to another. The conclusion was that right around 2019 we would see another viral or disease or influenza outbreak. And at the time they were, in 2014, when I originally was discussing all of this, and I went into it on several months in a row, I was discussing different aspects of it. It even overlaid with my outlook for gold from 2016 through 2021. And so the conclusions back then was that we would see another outbreak in 2019. What I was starting to say is at the time they were postulating that the solar cycle should bottom around 2018. Then that kind of stretched out as we saw more and more phases of just complete void of sunspots. And lo and behold, the solar cycle shifted in December of 2019. And one of the ways, the primary way they tell that you've transitioned from one solar cycle to the next is the polarity of the sunspots. That, if you were talking about it from kind of an Earth-based scenario or vernacular, during one solar cycle, all the sunspots have a northern magnetivity to it, and then during the next solar cycle, they shift to a southern magnetivity. And again, I'm simplifying it, and I'm not a astronomer or solar scientist, but that's the easiest way to describe it. So they pinpointed the first sunspot that had that reverse polarity came in December of 2019. So it reinforced all these cycles that back in 2014 I had been discussing, where disease cycles and there's other things related to that too. Back then I titled it War and Pestilence because I've continued to say too, I thought we would see a steady intensification into what I called war cycles in 2021. And so these the Bible refers to war and pestilence in many references, and that's disease. So it just discusses this frequent coincidence of disease and war for obvious reasons. You could see why the two would closely coincide. And these cycles that I'd been discussing back then and continue to focus on were kind of saying the same thing for 2019 through 2021.
Now, do we know how these solar cycles cause or create these effects?
The only thing that I've been, and again, that is not my field of study. I observe things, cycles, and do statistical analysis. So an actual cause and effect, I don't know, and I don't even know if you can say that particular low in the solar cycle had anything to do with the cause of this latest outbreak. The only thing I have seen and read is that it's one of multiple things that could create a little more vulnerability to it. Again, it's not, I think that people really go down rabbit holes when they try to take a particular cycle or a particular coinciding event and form or identify a causality between two coinciding events. And that, if they happened at the same time, how did one cause the other? And I almost never postulate that. I don't think that in most cases it is a direct cause. I think that there are much larger forces, whether they be natural, whether they be solar and universal type forces that create this ebb and flow of when you're more vulnerable and defenses are lower and immune systems might be a little bit suppressed as opposed to other times. And so those forces have many manifestations, and so that's one of the advantages, I believe, in doing something like I'm doing. I'm not looking for this causality between them. I'm trying to observe the manifestations of whatever the cause is, and seeing that there is a consistent periodicity or frequency rhythm of these events, and then pushing that forward and saying, okay, if this is an accurately identified cycle, then here's when we should see it recur again. And, here's perhaps some things that can be done leading into it in preparation or just general lifestyle changes you can make. And also, of course, where I apply it a lot is the markets and where these types of things could impact the markets. And once I've seen those much broader and much more general type cycles, which you can't trade off of them, then I'm just kind of, my radar's up a little bit more when I start to get a sequence of different trading signals, different market cycles that are potentially corroborating those big picture cycles. And that's why in early February, when I started getting this whole series of fairly ominous sell signals triggered in the stock market, I published several reports back to back, and one was titled "A Perfect Storm of Sell Signals," that I listed these 7 factors that were all now starting to set up for what I thought would be a sharp sell-off. I described it as something much higher magnitude than we've seen in recent years, that should take place between mid-February and late March. And that was also linked to this uncanny kind of convergence and coincidence of the 40-year cycle. And it was kind of amazing to me that both the 40-year cycle and this 2-year cycle that I've talked about going back to September 2018, when I identified the recurrence of this 2-year cycle and how it was projecting a sharp sell-off in the market in fourth quarter of 2018. That 2-year cycle has continued to govern a lot of the swings in the market in sometimes almost an uncanny fashion. And if you looked at both the 2-year and the 40-year cycle, as well as a myriad of other cycles and indicators, it was that great synergy that really had me very alarmed by what was unfolding in early February. But the 40-year cycle, if you look at what happened 40 years ago in the stock market, 1980, and I traced the sequence going back to 1978 and comparing it to 2018 to 2020 versus 1978 through 1980, and how many similarities and parallels between the swings in the Dow. And this latest one was telling me to look for a peak around February 12th or 13th in 2020, which is the exact date that the Dow peaked in 1980, February 12th, 13th. And sure enough, this year the Dow peaked exactly on February 12th, 13th. And back in 1980, the market then saw its sharpest decline, dropping to multi-year lows, leading into the final week of March, into the week of March 23rd to the 27th of 1980. So that was one reason I was looking for a sell-off into March 23rd to 27th of 2020. But then you overlay this 2-year cycle, and 2 years ago, the market had seen some similar movement, saw a sharp sell-off in late January, early February, just like it did this year. And then it rebounded into mid-February, and then it saw a sell-off and into March 23rd when the Dow hit its lowest close of the first half of that year. And so that was perfectly coinciding with this 40-year cycle and a lot of other work I had that was telling me to look for a sell-off into March, at least March 23rd, into the week of March 23rd to the 27th. Lo and behold, we see exactly that. The Dow peaks on February 12th, 13th, like I said, and up to now, its lowest low was set on March 23rd. And so all of these cycles were, we already started to see this recurrence of the disease cycles coming into play. That was already validated. And then you have the market cycles, and then you have the trigger signals that I use. All the cycles are a backdrop, but then it's specific technical indicators that I use and that I explain in my work that were lining up. And what I was talking about is, so in early February I had that perfect storm article, then immediately, either after or preceding that, I described this, what I called a foreshadow signal, which is another very ominous signal saying to look for a higher magnitude sell-off in the stock market. Then I did another report. All these were between February 4th and 12th or 13th, describing this greater synergy of negative signals coming into play that should trigger a sharp sell-off in the market. So it's kind of all those things coming together that really make it noteworthy and make it much more reliable in my viewpoint.
We'll have more with Eric Hadik right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Eric Hadik. Eric, where do these cycles put the price of gold?
I have been watching and discussing a very consistent 12.5 to 13.5 month cycle in gold that has it timed a series of lows leading into the bottom in late 2015, and then after a subsequent low in late 2016, then it inverted and started timing highs, and that's exactly what's to be expected from these cycles. I have a tool that I developed 25 years ago that I just call cycle progression, and it's, in some respects, it's very simplistic. In others, there are some very specific guidelines to it, but it shows how a good, consistent cycle in the market will alternate between a series of lows, usually 4 of them, and then it goes through a breakout phase where it now flips and starts identifying a series of highs. Usually the first couple in that series are ascending, and then the latter ones start to level out, or even the final, the 4th one in that series, is often a descending high. So this 12.5 to 13.5 month cycle, the final low it timed was in late 2016, was a ascending low from the late 2015 low, and then rallied into late January, early February of 2018, and then set the next high in late February, early March of 2019. And that same cycle came into play in March, could even stretch into April of this year. From a cycle basis, right now, gold is fulfilling that and could be timing an important high. It is interesting to me and just shows the acceleration of this market, that from a wave structure back in early March, gold fulfilled some key upside targets. And at the time I said, okay, we're above $1,700. It needs to drop to $1,450 before it can resume its uptrend. And at the time I figured that would take a month or two. And it happened within 2 weeks. Gold plunged right to $1,450 and then resumed its uptrend. Now we're spiking to new highs, and we're still within this monthly cycle. So I'm kind of watching it closely if we are putting in a pair of highs during this cycle. But all of that is part and parcel of the longer-term outlook that was even described back in the 2014 report you were referencing, and a lot of other dollar-related reports that I did in 2015, 2016, and have continued to reiterate the same analysis ever since then, that gold, I thought, would see a bull market from 2016 into 2021. So I think we still have additional highs in the future, but depending on what happens between now and mid-April, we could be on track for another fairly significant peak, and then see some consolidation before gold is ready to resume that uptrend.
Eric, what do you expect to happen in the equity markets?
Well, the equity market, like I said, I was looking for at least an intermediate bottom in that March 23rd time frame. And at the time, my work triggered an intermediate buy signal that I put out starting on March 19th through the 23rd. And my primary upside target for that, I listed them in each of the primary indexes, but one of the ones that has caught my attention most recently and has been more the leading market in this rally, the NASDAQ 100, is I thought that the NASDAQ, which had bottomed out around 6,600, my upside target was for it to get back to 8,300 to 8,500. And it has, and even as we unfolded in late March and the first few days of April, it just kept reinforcing that target. So that was really my initial, but also my primary upside target. We are now attacking that. The Dow Industrials and the S&P have not yet reached the corresponding upside targets, but wouldn't surprise me to even see a little shift in the coming days, since right now we're waiting on big OPEC Plus meetings and decision on cutback. Maybe you get some positive news from that, and something like that tends to have a bigger impact on the S&P. So you might see a little bit of a shift leading into the middle of April. So all of them are reaching their primary upside objectives. I think that we could set at least a multi-week top before the middle of April. And it's going to depend a lot on where and how that top is set as to what I expect after that, because there are certainly some specific cycles coming into play in the coming weeks and months. They're already identified, but it's the extent of the moves leading into those cycles that is going to be heavily influenced by what we do in this final week leading into the middle of April. So I do think we're still in this rallying from the March 23rd low, and that we should see an intermediate peak within the next week by mid-April, and then we see some probably consolidation or some volatile congestion between those two extremes, the March 23rd low and a mid-April peak, before the market gets ready for its next big move.
What do you think is going to happen with interest rates?
That is one thing that I've stayed constant on for a few years now. And the bond market, which, is inverted or inversely correlated to actual interest rates, the bond market has shown a remarkably consistent 4-year cycle. And I trace that back to before the beginning of this current century, back into the 1990s. And the last phases of that cycle in 2012 and 2016 timed very significant peaks in the bond market, so lows in the corresponding interest rates. And all of that projected a future peak in the bond market for 2020, ideally for June, July, the mid-2020 time frame. That's kind of the most precise application of this cycle. And so, even coming into this year, I was saying that we should still see this, that bonds should move progressively higher into the middle of 2020, and I would get a lot of inquiries saying, well, wait a minute, the stock market's just doing phenomenal, we've just ended another year at record levels at the end of 2019, the economy's doing great, why do you think that bonds are going to continue higher and interest rates are going to drop? And, I didn't know exactly, but the cycles and all of my indicators were saying we had seen a bottom in late 2019 and we were ready for this next phase of the uptrend in bonds. And then you start getting the sell signals in early February in the stock market, and all of a sudden you start to see some fundamental justification for these cycles in interest rates. And then you get the real ramifications of the corona outbreak, and all of a sudden those cycles seem like such a easy to identify thing. Oh, sure, interest rates are going to plunge, but it's something that technical and cyclical analysis had identified months and even years beforehand, even if the fundamentals didn't kick in until the very latter phase of that cycle.
Eric, anything else we should be keeping an eye on right now?
Oh, I think there's a lot of things we need to keep keeping an eye on, but that's probably plenty to discuss in this sitting. So I think that's a good place to kind of wrap it up.
And Eric, we haven't asked you for a while. What does InsideTrackTrading.com do, and how can people get more information about it?
At Inside Track Trading, we provide all of this type of analysis and educational material that I've been discussing ever since forming the company back in the early 90s. One of my objectives has been not only to provide analysis and trading strategies, but also to make it an educational platform as well, so that these indicators, these cycles that I'm discussing and continue to learn more about, that I could be sharing that and having some good interaction and with subscribers and readers, and really helping to understand what governs and what influences the markets. And so we provide monthly and weekly publications and some interweek alerts and other types of technical and educational material, all of it focused on the markets, on the stock market, on the futures markets, precious metals, currencies, energy, commodities. And so that through our website you can see a lot of examples of past reports and analysis, and also find out more information about the specific publications, what might be most applicable to where a specific trader is at in their portfolio management, and see if there's something that might be useful to them. So, listeners can go to InsideTrackTrading.com, and again, that's with the extra I in the middle, INSIIDE, TrackTrading.com, and find out all this information.
Eric, thank you so much for being on the show.
Thanks for having me back, Jim.
My guest has been Eric Hadik, CEO and President of InsideTrackTrading.com, Inside spelled INSIIDE. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Mark Leibovit, and Eric Hadik, and thank you for listening. If you have any questions for the show or our guests, you can send them to info@howstreet.com. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HoweStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, CEO and President of American Manganese. Larry, what's the latest around American Manganese right now?
Well, we've been very busy having conference calls. As a matter of fact, I have another one in 15 minutes. But we're getting interest, too, now from actually mining houses that finance mines around the world. So I find that very interesting because they'll have an immediate grasp of what we're doing, whereas a lot of the other calls, it's a learning curve. So that's exciting. And the market, I mean, I'm really happy with what I see in the market. To give you a good example is when the Dow went up, gold went down. When gold went up, when the Dow went down, gold went up. But now you're starting to see them react in tandem, which is getting back to normal in the market. And I'd like to talk a little bit about our V-shaped recovery. I mentioned this way back in the early days of the Dow crashing, that I thought this would be a V-shaped recovery, and looking at the chart, that is holding up. We've gained back about 5,000 or 6,000 points, and we're probably 5,000 points under the high of the Dow. And so that's really interesting. I just caution people that there will be corrections in the market. I said this would be kind of a jiggy upward trend where you're going to have days it's going to go back, and then you're going to have days where it's going to go up, but the general trend will be up. And so I'm glad that theory is holding up, because that means recovery in the markets is imminent, and we can all get back to business as far as the markets are concerned. So there's other things that are out there, like Corvid, the coronavirus is going to destroy Tesla, and those types of headlines, which are just plain ridiculous. The Tesla is still plowing ahead with everything that they're doing. Their stock is gaining on the board, and yet these guys keep talking about the death of Tesla and all this crap that's going on, which doesn't help anybody in the EV space, and that's where we're at. So I think that's a bunch of bunk, and Elon Musk is plowing ahead as usual. I thought that was a big fight he took when he built his first gigafactory in just outside of Reno, and yet that was accomplished and done, and now he's, I understand, at number 4. And they're just the ground's all leveled, and they're ready to start building in Germany. So, I'm just seeing this as an opportunity for. It was an opportunity certainly for people to pick up Tesla before below 500, but now that's starting to look like it may not be there much longer. So that's enough on the markets. Other things I'd like to talk about is the coronavirus. The coronavirus has affected everybody across the board, bar none, and it's set back timelines significantly, probably some up to a year. And so that's unfortunate, but it's not going to be a lasting situation, and we can move onward. Now, the other thing that they're talking about is that air pollution seems to affect, if you're in a polluted area where contaminants are getting into the air, mostly through burning of fossil fuels and probably waste and everything else. This is where people are more likely to get the virus, and so you got to be careful depending on the jurisdiction you're in and what that's going to do. What's that do for us? Well, it shows up that protecting the environment should be the first thing on everybody's mind. We've worked hard to develop patents and do our pilot testing, and we're talking to a lot of companies. That hasn't slowed down. As a matter of fact, that's increased. And but because it seems like now the tenure is they want to have a total solution, which we can offer. And so I think this is going to be good for the company, just not that far down the road. We've got a solution where we put nothing into the air. We put no contaminants into the air or the environment. And, that still continues today. There's still being batteries dumped in the waste dumps. There's still the final solution is, burning the batteries or burning the powders. And, again, that releases contaminants into the air. And it's not efficient, and it's not going to alleviate the supply or demand of cobalt or lithium, for that example. And we get all those elements back, close to 100%. High purities. We've tested material for Tier 1 companies. Everybody's aware of that, and we've had great success in that. And we've produced the hydroxides and the sulfates separately, which is something that was new to our business plan. But now we've proven that we can do that, and we did that with a Tier 1 company. So, I'll give you an example. I was interviewed by a group yesterday, and they seemed more intent on really shooting the company down than they did on helping us put the news out there. They kept calling it a proprietary system that we had, a proprietary process, and I kept correcting them and saying it was a patented, and they said, well, what's the difference? There's really no difference between that. And I thought, God almighty, who am I talking to? And so we've asked them not to publish that, and because it was basically a demeaning, and I've had hundreds of interviews from all over the world, and this is the most demeaning one that I had. Didn't want to listen to what I had to say. Was only interested in pushing their own agenda. And, but that is not, they're not the only people that think that way. They don't realize that if you do have a solution and it's not patented, everybody in the world's going to have it, and you're not going to build out a company that way. And, we certainly are protected by that. I get the lithium briefs every day, and I see dozens of patents being filed on battery manufacturing. And so don't tell me that patents are no good, because these big companies wouldn't be spending hundreds of millions of dollars a year on patents if they didn't protect their technology. And so, that's just one of the burps, as far as I'm concerned, in our continuing flow of information. And we're going to be closed tomorrow, as everybody else is, and we'll be back to work here on Monday. And, I've got some important conference calls on Monday, and Zark and I will attend to that. So, I just tell everybody chins up, we're not going to stay down here forever, and, the stock looks like it wants to go, and eventually it will. You can only stand on a spring so long, and then suddenly your foot goes off the spring, and it goes up, and that's what we're hoping to see in the market, because as far as I'm concerned, a lot of companies out there that have lost value. It's got nothing to do with their product. It's got nothing to do with their business plan. It's got nothing to do with anything but the virus, and they will all pop back more rapidly than the ordinary market will. So I wish everybody a great weekend. I'm looking forward to it. The sun's shining here, and it doesn't mean you can go out. You go anywhere. There's not a lot of traffic on the roads, so people won't be getting out. And I say to all of our shareholders and investors to stay safe. And that's pretty much what it's been a short week, so I don't have a lot more to report.
Larry, if people wanted more information or information on where you're traded, where should they go?
They can go to our website, which they can do due diligence on. We're very transparent about what we do. Since our patents have been filed, anybody can actually go and research our patents and see where we're at in the scope of things. But you can go there to AmericanManganeseInc.com. We're traded on the Toronto Venture Exchange under the symbol AMY. We're traded on the OTC under the AMYZF, and we're traded in Frankfurt under the symbol 2AM. You can always reach the company or myself at LREAUGH@AMYMN.com, or give us a phone call at 778-574-4444.
Larry, thank you so much for the update.
Well, Jim, you're very welcome, and you have a great weekend.
You too. I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on April 9th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.